All right, traders, welcome back. Hope you're doing well. For today's part 2 of inflation data, we have PPI numbers coming out in just about 15 minutes to go. Give everybody just a second to tune in here. Started just a few minutes early. I've got a lot of charts to get through. So let's go ahead and get started. First of all, let's take a quick look at the markets, how things have performed overnight. Of course, had the London and Asian session behind us now. You've got some interesting moves happening. Here's the NASDAQ, by the way. Huge shoot lower. Captured pretty much all of the losses from CPI yesterday and passed through those highs briefly. Now we've come back, and after all said and done, guys, we're still pretty flat on the week, I think. Well, no, week is up a little bit, but week flat on the last couple weeks, right? Very interesting to see that. We've got some interesting stuff to talk about. You've got so stocks are lower here today, except for the Russell holding up well. Gold is up here again. Bitcoin and Ethereum down here. Doge down quite a bit, and then you have the dollar index lower here today. I've not loved the story as much for the dollar index here recently. We've been talking about this. Make sure, I keep saying this, make sure you know your environment, right? We've bailed on the super perma bull setups for dollar in recent. If you've been watching the streams and videos, you know this. The issue with the dollar right now is you're losing that high growth. Now, you want to talk about the environment where the dollar looks really strong? Right here. When you have a scenario in which inflation is rising and growth is rising, that is where the dollar typically does quite well. What kind of environment would that be? 2022 might come to mind, right? In 2022, you had rising inflation and rising interest rates and an economy that was stubbornly strong. That was the scenario in 2022. Many people thought like, oh, 2022 was a big recession. No, actually, there was never really a prolonged, consistent recession in 2022. In 2022, we had kind of a interesting year. You had a lot of inflation and growth wasn't completely dead either. So it's just interesting to see that. A lot of companies actually grew their earnings in 2022. But so you asked me, okay, why is the dollar weak here? Why are we not seeing dollar strength? You had a hot CPI print. Yes, but remember, I'm going to keep saying it, and I'm going to be annoying this year with this. Know your environment. If you're sitting around, you're saying, why is the dollar index weak? Look at what we're looking at together. This would be a good indicator as to why the dollar index is not screaming through the highs and trend following 101 and push to the upside. Does that make sense? Why? Services PMIs, weaker than forecasted. GDP growth, weaker than forecasted. Retail sales, weaker than forecasted. Also, the fact that this is black text really annoys me. So I'm going to fix that because it's annoying me. So let me fix that. We're going to go here. Text needs to be changed to white. And we're good. Oh, wait, let me add my little cleanup piece. There we go. And we're good to go. There we go. Looks much better. So retail sales, right? Missed expectations. CPI was cool. This is also, I'm sorry, not cool. It was hot, right? So this would be considered more dollar bullish. We'll get questions answered today about PPI, right? So PPI year over year comes out in just about 10 minutes. So we have some really key stuff. But we're trying to understand. Again, I am going to be annoying with this new heat map to no end. So if you don't like walking through economic data and understanding the environment that you're in, I would encourage you, like maybe this is not the live stream, maybe this is not the channel for you. We're going to get more into fundamental data this year than we ever have because we've got the tools to do it. We need to understand the environment that you're in. Look, I am really bullish on metals right now. I like gold. I like silver. This has been a newly developing theme for me. If you tuned into the show a month ago, I wasn't talking about gold and silver a lot. But now my system is screaming metals. It doesn't guarantee that metals are going to go higher, but I would say that the risk to reward on metals for me personally looks good. I'd rather be long metals than anything else in this market at this time. That will change. It always does. Something rotates in, rotates out. That's the whole idea behind the edge finder. But right now, there's no place I'd rather be than long metals. And if we get a big sell-off on PPI today, I'll be a buyer of metals. So I like the story. Yesterday we discussed with CPI. You can go back and watch the stream if you'd like. I pointed out that with metals, I said that yesterday, if you get a sell-off on CPI, that's a dip that I think is going to get bought. And that's exactly what happened. It's not that I'm a genius. It's not that I like, oh, how'd you know that was going to happen, Nick? Like if you go back and watch the video yesterday, look, I'm long silver myself, so my money is where my mouth is. But I said on stream that I think any dips on CPI and PPI, any significant dips, I think, best guess, educated guess here, because I could be wrong, educated guess-wise, I think they get bought. And that is exactly what happened yesterday. Why? Again, because the data suggests that we may be tilting towards a stagflation type environment where growth is faltering a little bit and inflation is staying sticky. In this environment, the Fed cannot cut rates aggressively because inflation is already a problem. So you have this environment where people panic. They say, well, if growth is starting to hurt, stock earnings could struggle, but inflation is going to keep the Fed from saving the day. What do we do? That's where the metals thrive. Does that make sense? It's an alternative. Metals are an alternative to traditional stocks and bonds. So when we look at, I'm not saying we are in a stagflation environment, by the way. I'm saying that the risk to one happening recently, I would argue, have gone up. You've seen some slowing in growth data and some increases in inflation. So when we know the environment that we're in, and you spot, hey, look, we're in a stagflation type of environment, the edge finder, we can check its work and say, in a stagflation environment, typically I like the idea of being long metals. Does the system accurately showcase that in its top setups algorithm? Yes, it does. Silver and gold are top of mind for the edge finder at this time. So this is the system thinking through this for us, right? So we've identified just visually, when we look at the heat map, that we're tilting towards an environment where inflation is sticky and growth is stagnant or slowing slightly. It's not even slowing. It's just not growing as fast as people had anticipated. Tariff concerns, PMI is a little bit weak for services, right? Job openings a little bit declining. Possibly all of that is written up to tariffs. Perhaps some uncertainty around that. Perhaps some slow job openings due to uncertainty of what the environment for the economy is going to look like. You know, big CEOs may be choosing to hold off on hiring until there's more clarity around what's happening with tariffs. All of that stuff in mind, the edge finder should be picking up, and that is exactly what it's doing. The edge finder is pointing towards gold and silver as a bullish bias because we are potentially on the precipice of a leaning into a stagflation type concern. Now, again, I want to reiterate, I am not saying we're in stagflation right now. I think it's too soon to call that. But traders trade in hockey. It's like you want to be going toward, I don't know anything about hockey, but I'm going to draw a hockey puck. This is a common expression. If this is the hockey puck, right? And this is your hockey stick. Traders want to be trading in the direction of where we might be going, not where we currently are, right? So is the economy a good state right now? Yeah. But if some of our expectations are missing forecasts, we may be heading, and this is the key thing, this is what traders do, we may be heading in a direction that is differing. So if we understand where the puck may be going, that's what the edge finder is trying to display. Of course, the future is very difficult to predict. But if that's where we're trying to go, I want to be in the direction of where the edge finder is pointing. So gold and silver continue to look good. Now, again, let me reiterate over and over. I'm not here telling you that you should go out and buy gold and silver. You do what you want. I'm not here to give financial advice. I trade the markets. I do what I do. You do yours. You do your own trading strategy. If you're looking for somebody on the internet to just tell you what the market's going to do next, let me know if you find them, because nobody knows for certain what the market's going to do. I only can do educated guesswork as a trader. And sometimes I'm going to have losing streaks and periods where I'm absolutely dead wrong. That out of the way, there's my warning. I personally like silver to the upside. I have a long position currently traded, or currently I am long on silver. Price pulled back to this 38.2. We had that reading from the edge finder. I like it quite a bit. So I'm going to continue to look to be long until something changes in that quote unquote environment that we're in, according to the edge finder's heat map. Hopefully that makes sense. So for me with silver, how am I managing this trade? Well, if we can shoot through the highs here today, if we get, a cool PPI print, or the market rallies on a hot print like it did yesterday for gold and silver, again, stagflation concerns. If that is the scenario, for whatever reason today, if we see a big poke through those highs, I'm going to look to take this stop loss and reduce my risk on the trade. I'll probably put it right behind these 50% retracement. And if we can break and close above, then I'll start to look to trail my stop loss into profit. So that's how I'm looking at it today. We'll see if it can follow through. Your silver call was great. Thanks, Mike. But it is too early to celebrate anything. This is just a trade that started in the right direction. It could completely turn around and go against me, but I like the risk to reward here to my silver idea. And I am looking today, if you get a push through those highs, like I said, to just trim the risk on the position. So just something to think about. When we look at indices continue to look really range bound for me. I just think that the outlook for indices is very mixed at this time. You have inflation hot, you have tariff concerns, but you also have company earnings looking pretty solid. So at the end of the day, if companies are still growing, doing quite well, that's not something I want to short into, right? So I'm not going to short the indices. I'm not going to be bearish in a growing corporate earnings environment. But I would need to see something shift, perhaps like really cool inflation. Had we gotten that, something to get us to break out here. But that's one of the things that I like about the edge finder right now, is that it's really given back some score on the indices, which I took that as a signal to be like, okay, in that case, I'm not going to initiate any new trades. S&P, NASDAQ, Dow, Russell. I'm not going to take any trades on those. So I am, just going to wait for a more clear signal from the edge finder on that front. In the meantime, like I said, my focus kind of stays squarely on metals at this time. By the way, if you guys did not join our Telegram channel yesterday, it is completely free to join. We've got a ton of free market analysis being shared. Myself and Frank, we also just dropped a technical analysis course in the group. If you're not already in there, we also did, here's another thing, is we have our macro updates going in here, so you can see, what our thought process is on, inflation. So if you'd like to get these, if you don't want to have to sit through the video every single day, it might be worth joining our Telegram channel. It is completely free to join, by the way. You can get these updates sent directly to your phone, to your desktop. I don't know if you guys use Telegram on your desktop. I actually love having it on my desktop. It's as a trader, I spend more time on the desktop than I do on my phone. So if you're not on the Telegram, take a second to join. We're sharing a ton of free value, free courses, free analysis each and every day in the group. So make sure to do that if you have not already. The link is in the chat right now. So let's also take a quick look at the dollar index with just a few minutes to go here. What does the dollar index want to see? The dollar index wants to see, for higher prices, it would want to see PPI come in hot to match up with yesterday's hot CPI. This is something we see very often, like following a CPI report. You get like a bit of a consolidation, simply waiting for that producer price index number. So dollar index is trending higher here ahead of the report. Let's see if that follows through. We've got just 2 minutes to go before the producer price index numbers come out. These are your wholesale prices, and they are, of course, an important indicator of inflation in the economy. We are forecasting here. Let's see. Let's do. Make sure we pull this up here in time. Producer price index numbers forecasting for 3.2%. Previously was at 3.2% or 3.3. So we're expecting a decline in producer price index numbers. We can pull up our indicator here. You can see last time around we had a cool PPI print, but then preceding that we had 3 red prints, which would signal higher than expected or hot inflation. So we had 3 hot inflation prints. We had a cool one last time. Are we going to get another cool inflation print or a hot one? We're going to see that in just a second. That will tell us a little bit more about the inflation story and possibly confirm or deny, I guess, the move that we saw yesterday in the CPI. So we've got that coming out here in just under a minute here, guys. We've got about 40 seconds to go. I just want to ask a real quick favor. If you have enjoyed the commentary, if it's been helpful to you in any way, take a second to make sure you are subscribed to the YouTube channel that you're watching, or to Twitter. If you're watching on Twitter, make sure to follow and hit the thumbs up button for me. I really appreciate that. Okay, guys, we're going to go ahead and get ready here. I'm going to switch over to the all markets view, and we can go ahead and roll our quick breaking news coming in. On the screen right now, I've got stocks over here: gold, dollar, Bitcoin, oil. There is a little bit of everything on the screen for you. Should see PPI hit the number in just a second. All right, an initial move higher for stocks, blipped higher. Now a mixed reaction here. Look at that big spike up and then complete reversal. Gold slightly lower on this. Let's see what the number came in at. 3.5%. Inflation, 3.5% compared to 3.2%. Core coming in at 3.6 compared to 3.3. Yet again, confirming, I would say, yesterday's concerns about inflation. Interestingly, not seeing a huge move on the dollar. I would actually have expected a little bit more to the upside here. Stocks did a complete 180. Look at that. This is, again, why you have to be very careful trading news spikes. A lot of people love to do that. I personally find that to be the ultimate form of gambling, because at the end of the day, news spikes can be so violent, and orders can just get like ricocheted off and completely reversed. So really dangerous. Unemployment also worth noting. Let's take a look at that. You had jobless claims here came in 213K versus 215K. Let's see what else. Oh, let's see. Pull up Forex Factory. It's a little simpler for some of the employment data. Okay, so this came in pretty much in line with expectations. But yes, overall, PPI, I would give it a slightly hotter than expected read here, causing a little bit of market uncertainty. You've got, so far, stocks pretty unchanged from that report. NASDAQ down about 0.2% today. Same with the S&P 500. Russell, 0.3%. Gold holding on tight to the little gains that it has today, 0.22%. Silver down about 0.2% as well. Copper up about 0.5%. Natural gas up 4%. Bitcoin down 2%. Ethereum down 3%. Dollar index, again, crawling back a little bit here from its lows, but noticeably stocks now taking on a little bit of water here. And NASDAQ down a little bit more. I mean, these are not huge moves, though. We're not talking about 1% swings or anything like that. You're talking about a slight move lower here for stocks. Let's switch over to kind of a full chart here for a second. Okay. So yeah, dollar index just holding steady at support here. Nothing. Again, I think that the story here for dollar, the trick here is that yes, you've got inflation hot, but what may make people a little uncertain is the growth data has not been there. It's not been as attractive as perhaps it was a month ago. Let's also take a look at bond yields here this morning. Interesting. Bond yields, I guess they're climbing, but actually moved lower here initially. Same thing with, here's the 20-year, 2-year. Stocks now regaining some ground. Russell's up 0.5% now. Yeah, really mixed response. Gold and silver are slightly back in the green. What does this mean for Bitcoin? Bitcoin just doesn't look super attractive right now. Rising inflation, slowing growth. For me, that's not an environment for Bitcoin. You want to talk about Bitcoin's environment? You want to probably see Goldilocks is the environment where Bitcoin would do well. Cooling inflation, solid growth. That's where you want to be long Bitcoin. That's when I was long Bitcoin, was when we were in the Goldilocks scenario at the turn of the year, right? But I think we've switched slightly more towards not necessarily full-blown stagflation, but we might be leaning towards that direction. So I don't want to get caught with a huge long position on Bitcoin going into that. Again, higher inflation and slower growth is an environment that is no fun for consumers. And consumers are the ones who a lot of times are the one, getting all the hype up for Bitcoin. So for me, it's like, okay, if Bitcoin is, if we're in a more stagflation-y type, slowing type, just not super exciting economic environment, then I'm not going to short Bitcoin, but I'm certainly not going to be like full port long Bitcoin, till I die. That's not what we do on this channel. We track the macro and we focus mostly on what this shows you. So what is this going to look like today? PPI year over year is going to come in, and once this updates, it's not yet updated. This is yet again going to be one more red indicator on the screen here. What does that tell you? This heat map is so powerful. It is so important to focus on, because when this flips red, that will put us at the vast majority of our indicators on this screen printing red, showing inflation is rising, growth is not as exciting as it was forecasted to be. This is all based on forecasts versus actual data. This is if you pull up your Forex factory and you track one, like that is perfectly fine. This is for macro traders. If you are more advanced, if you are trying to actually understand what's happening in the markets from a macroeconomics perspective, a tool like this is for actual serious traders that are interested in that, right? Because at the end of the day, if you want to track, if you're only focused on one indicator today, you're missing the rest of them. You have to look at indicators like this as a collective. That's the whole point of this page. You can't just look at inflation without looking at growth. You can't just look at growth without looking at inflation. You can't look at just interest rates. You've got to look at the collective, similar to how the Fed does. Why do people focus on fundamental analysis? Well, it's because the Fed is the most market moving thing in our time. What Jerome Powell has to say and what the Fed does, it impacts everything. Gold, silver, stocks, bonds, crypto, currencies. The Fed is in charge. What does the Fed look at? You're looking at it right now. That's what the Fed looks like or looks at. I mean, they look at even more than this, but these are the big ones, right? So what we do is we built a tool that allows traders to focus in on the Fed determining indicators to what they make their decisions on. Are they going to cut rates, hold them, or hike them? Trying to predict that is very difficult if you don't even have the data in front of you. If you'd like to try out the Edge Finder, here's a link. You can try out the Edge Finder for 30 days. If you want information about those trials, take advantage, fill out that form that just got dropped in the chat. You might have to scroll up a little bit, or if Chandler, if you could drop it one more time for us. Take a second, apply for a trial. If you're taking your fundamental analysis seriously this year, the link is in the chat right now to apply for a 30-day trial to the Edgefinder. Is PPI good or mixed? Again, Mel, here's the thing. We can't look at one indicator by itself. If you're somebody who's saying, is PPI a buy or sell for gold? Respectfully, there's more to it. The market is not that easy. PPI came in hotter than expected, but that doesn't mean anything if PPI is at 0.1% year over year and it came in at 0.2. That's very different than if we're at forecasting 3.3 and we got 3.5, right? We have to know, where is inflation at? Is it sticky? Is it hot? And at the same time, what type of environment are we in? Is the economy just running off the rails? It's so strong. Well, I would actually argue that maybe not as much as expected. A lot of forecasted values are missing expectations. That is telling us, I'm not going to say that the economy is crashing, because I am absolutely not. I don't think that. But the economy might be a little softer than we previously thought. Maybe the labor market's not incredibly strong and undefeated and the consumer has money to spend for days. Maybe there's a little bit of softness in there. And if that is the case, then PPI is different. You have to know, you can't just look at, oh, I understand how to trade PPI. You got to understand how to trade all of the macro together. That is understanding the big picture. Once you understand the big picture, you know certain markets you probably shouldn't just be all in long or all in short, because that environment is dangerous to do so in, right? If you know that Bitcoin typically needs a Goldilocks type of environment to thrive, right? Soft inflation, not threatening inflation, and growing economies, like really strong economy plus cooling inflation. Goldilocks type environment is where Bitcoin probably does exceptional, right? I mean, that's where it went exceptional. If you looked at during this time, the heat map was very, very blue. You had cool inflation for the most part compared to forecasts, getting closer to that 2% target. Now we're moving away from the 2% target, right? Inflation, let's look at CPI. Let's understand what we're doing here. Inflation is rising away from its 2% target. That is problematic. Look, here is 2% target. We just hit 3%. Inflation is rising, okay? So if inflation is rising and growth is missing expectations, what do we do? Well, there's an answer for this. There's a protocol for this. If you're an Edgefinder user, you know that's going to lean you into the pocket more of metals rather than trying to just full port go long Bitcoin. Now, I'm not saying Bitcoin can't rally. Maybe something comes out. We don't know. Maybe Elon Musk and Trump say something about a crypto reserve and it makes crypto go higher. But I don't trade based on that. And I don't think you can trade based on that. You can't fingers crossed, one eye shut, one eye open, hope that Elon Musk says something and that's your whole investment strategy. That sounds like ludicrous, right? It sounds as silly as it sounds. What we do on this channel is we talk macro. We understand, okay, rising inflation, cooling growth, no Bitcoin, right? That's how I'm viewing it. Now, if something changes, I traded Bitcoin quite a bit last year and this year. But as things have shifted, I have no position on Bitcoin. We've gone sideways in price action, and inflation rising is problematic for Bitcoin. Does that make sense? Would you say that the inflation chart could be seen as a technical chart, as in lower highs and lower lows? The inflation is just taking in a breath from declining for a few quarters. That's a fair way to view it. Kind of, yeah. I mean, you could look at this as a trend, right? I do that often. What's the trend of inflation? The way I look at it is like a 3-period moving average. So if you look at a 3-period moving average, moving down. Oh, we started to trend, then we started to go down, then we started going sideways, trend down. Okay. Now I would say it would be foolish to say otherwise, that inflation is now kind of trending up. I mean, if you want to get technical analysis on this, you could kind of point out like, here's your trend line. If I draw from the highs, right, we've broken out. So, we were expecting to get down to the 2% target and we are not there. I'm not saying we can't potentially change course and go lower. But right now, like, again, we are only operating off of educated guesses. That's all we can do as traders. We can't know what inflation's going to do. We can't know what Elon Musk is going to say next, or Donald Trump, or like you can't trade based off of that. So what can you trade off of? You trade the environment that you're in. So this tool right here, we have received so much positive feedback from so many of our users. This is making it more clear to know the environment that you're in and to trade accordingly. Does that make sense? So if we look at this chart, I remain in this camp. I'm not saying we are in stagflation, but the possibility that we're leading towards that is rising. So I'm trading where I think the puck is going. I'm long silver. I'd be interested in buying gold if it dips. If you get a pullback in gold, I like that. I'm already long silver. I like that as well. Stocks, I'm not bearish on stocks, but I'm also not bullish. Very mixed. Don't love them. Don't hate them. I have many holdings that I hold just long term, but I'm not really interested in adding a bunch of stuff here. I actually think that stocks are a great potential buy, but I would need, a 10% correction, a 5 to 10% pullback. Maybe that would be a little bit more attractive. 5%, by the way, puts us right there. A 10% puts us down here. And as crazy as that may sound, that is incredibly common and normal for the markets to see. Here was a 10% correction just about. Intraday, there was a 10% correction from peak to trough, right? Corrections like that happen in markets. And it doesn't mean it's the end of the world or the death of the bull market, but we haven't had one in some time. Like I said, I'm not here saying I'm shorting this market. I'm certainly not bearish on stocks, but I think, and this is, again, I go out on a limb every single day on my YouTube channel. Sometimes I'm right, sometimes I'm wrong. Ask any content creator. They will tell you how painful it is sometimes as a content creator to go out and say, I think silver's going to go up. And if it drops like crazy, you get 1,700 comments of saying, Nick, you're an idiot. And sometimes I am. Sometimes I'm wrong. Like, I'm going to tell you right now, I like silver, but it's an educated guess. And the sooner you understand that trading is all just educated guesswork with good risk management, the better off you're going to be. I'm telling you right now. If you think, oh, Trader Nick just, he sounds so smart until he's completely dead wrong on silver. Being wrong on silver is not being the end of my trading career, right? I'm not like all in leverage calls. And if it doesn't work out, my account is blown to zero. That's gambling. I like the probability of being in silver. I like the environment for it. If it fails out, I stop out, I reevaluate, look at the environment, and make another educated guess. There is a difference. Okay, guys, 2 things for you. Number 1, make sure, if you have not already, a lot of people liked this yesterday. A lot of people liked the macro updates in our Telegram channel. So I just want to make sure, if you're not already in our Telegram channel, make sure to join. I'm trying to find that. Here it is. Look at this. So yesterday we did a macro update inside of the group. I just wrote up a little bit of how I'm feeling and did a market heat map showcase. If you'd like more of those, make sure to join our Telegram channel. We'll drop the link. It is completely free to join. You can see it I don't know if I'm going to do it every day, but it depends. If there's a huge reaction to it, maybe I will. But make sure to join the free Telegram channel. It is complete value. We're adding free course material in here. We just dropped a technical analysis course, 100% free. There's no lies there. I'm not kidding at all. Like, you can literally go download our free 100% free technical course. I had 2 interns work all summer on getting that built. It is completely yours for free. Sponsored and paid for by Nick Zayek's personal bank account, actually business account, but you get it. It was completely free course. There's no cap there. We offer free courses on our website, a1trading.com. Our theory there, and I promise we're going to move on. Our theory there is that if we help the community and we help, bring value to the community, it will pay us dividends later on when people potentially purchase our products later, or just watch this YouTube channel and support us. So we invest in the community by offering a ton of free stuff. We also, of course, make money selling things, but we give and we take a little bit each. Anyways, guys, we are going to now transition to our next segment. We're doing Technical Thursdays with Miko and Marco. We do this every week, and I'm thrilled to see what they have to say about, markets moving here this morning. Stay tuned. We'll be right back with them after this.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share edge finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
All right, we're back with Miko Marco, one of my favorite segments each week. How are you guys doing?
How are you? Not bad.
Good to have you guys. And what we do for listeners on this segment is basically we do a technical run through, rapid fire on many different charts, and we hear from these guys who are both very technical traders who trade different time frames, but also incorporate both a swing trading style and a day trading semi style from Marco. But we'll talk about that. So let's go ahead and jump right in. We've got PPI came out this morning. It was hotter than expected. Bitcoin's taken a little bit of a beating here, down 2%. Markets are definitely moving. Let's maybe start with the elephant in the room, I guess the dollar index. Marco, why don't you go first? Dollar index. What's your thoughts on this one right now?
So for the DXY, just a quick technical analysis, technical breakdown. For me, this overall strength has paused a little bit right here. So we have had a little bit of flat price action, so nothing much happening. But we did have CPI, which was a bit unexpected. It flagged inflation, so possibly the next Fed meeting will be a bit hawkish, and that should raise the value of the US dollar. So this chart fundamentally could go up. The technicals are telling me that we're again in a bit of a pause, but still the overall trend is up, in my personal opinion, on this daily chart. So if I combine the technicals and the fundamentals, I would say that I'm bullish on the DXY, and I would expect more dollar strength. I don't know what the hell could the Fed do, except raise interest rates. I think it's just inevitable for them, and to be more hawkish in their overall stance, which is indeed going to push the markets up. So, and this kind of also fits in with the narrative. Not the last Fed meeting, but the one before was a bit more, let's say, dovish, if I remember that correctly. So we kind of paused like this, and this trend may then continue after this little bit of a pause. So that's the DXY. Is it good for me? Yeah, it's pretty good for my dollar pairs, because then I'm gonna get a nice downtrend. So this downtrend could possibly continue on my dollar pairs. Right now, that is kind of the reason why I'm not getting any opportunities right now, because we're just a little bit too corrective. So I would like to see that overall downtrend to continue and some nice momentum, because I execute on the 1 hour, and the 1 hour is currently very, very choppy. So yeah, that's kind of it for dollar pairs.
Yeah, no, and again, the prospect now has become more interesting, this dynamic of, if you see inflation continue to rise, there's a possibility that the Fed may actually entertain the idea of rate hikes. I don't think it's incredibly likely right now, or the bond market certainly doesn't think so, but it could happen if you continue to see inflation come in like we have this week, with both PPI and CPI coming in higher than expected. Yeah, dollar index been kind of flat around this 107.8 level. Mika, what do you think? Dollar index and any favorite currency pairs with the dollar in them? What are you currently watching?
So yeah, dollar, it's a bit of a mixed bag past few days. As Marcus touched upon, it's pretty much consolidating there. So the overall trend for me is still bullish. I still do expect more upside, still a very clear uptrend, as we can see higher highs and higher lows. So that's what keeps me bullish in terms of my bias. And if I go to the weekly chart, as I've touched on before, we had a really big 2-year range, which price is still trading outside of. So I'm still looking at this as a breakout. As long as that remains so, I do think we'll still see higher prices. If we break below, I'll probably relook to change that bias. But on the lower time frames, I do have a shorter term bearish bias. We had a really big drop a couple of weeks ago, and I'm looking to see if price can come back and retest that low. It's only more of a temporary bias I'm looking at. As I said, long term, I'm still bullish for now. So I'm actually trading pound USD see if I can take advantage of that move. And so far have had a bit of upside. My target is pretty much the high. So it's not really like a bigger swing trade. It's more of a shorter, medium-term trade, if you will. It's pretty much tested the high. So I will look to close potentially in the next few hours if that momentum does continue, but we've pretty much hit the target. But funny enough, once I do close the trade, I actually will be looking to see if I can get to some sells for pound USD. As we get back to the highs here, I'll look to see if I can catch that next lower high. Still for pound, the very confident bearish trend we have here. So I do still see that continuing. So pound USD looks good for some shorts, but I want to see if we can push a little bit higher up and then maybe find some entries later on.
Yeah, no, I like the pound dollar and euro dollar kind of bearish outlook for me personally as well. I also have a dollar CAD long position, which has been sitting doing a whole lot of nothing here recently. But on the Forex side, I slightly favor the dollar, but you know, it's also taken on a little bit of pressure here recently with the you know, some of our growth metrics a little bit lackluster, but from a pure price action standpoint, we're sitting at this level. We'll see if it can make a decisive move one way or the other. If you do get a breakout, and we always talk about, you know, what happens if we're wrong with this idea. If you get a big failure on the dollar index, you know, a lot of those currencies may have a little bit deeper retracements in what has been longer term downtrends, euro dollar, pound dollar is what I'm speaking about. You know, specifically, of course, the opposite for things like dollar CAD, dollar yen, dollar Swiss. But, you know, we'll see if there's any further pullbacks in the dollar index. We've mostly been chopping around and consolidating going back since November. So really, you know, not a huge move in either direction. But that brings me to a really interesting next segment, which is, of course, metals. I have a really strong opinion right now. I really like metals to the upside on a fundamental space. I could be dead wrong about that. And 2 weeks from now, I'll act like it never happened. And if you guys are doing the show without me, it's because I'm crying. But if metals do see a weaker dollar, in theory, that could also be positive for gold and silver. However, throwing that theory out the window, gold and silver have done pretty well despite a pretty strong dollar. So I'm curious if that relative strength is also attractive to you guys. Marco, what do you think about gold, silver, metals in general? Any interest there?
So let me just open it up on the daily chart. I mean, gold is looking great. I just don't see any signs of stopping on this daily chart. It looks extremely bullish. So basically, it's kind of repeating this uptrend. Yeah, we had a big correction, but now we have just broken out of this all-time high and are just crushing higher. So yeah, I don't see any technical signs of stopping for this chart. Silver is not as strong, but it's definitely following with a little bit of bullish momentum. It looks a bit more corrective, to be honest, on this daily chart. The candles look a bit worse, just the structure. So gold would be my favorite, and it is very, very bullish. So I wouldn't be a seller in this market for sure. Just it looks so strong, and you definitely don't want to be on the other side of this uptrend when the markets look like this, and when, let's say, there's so much momentum behind it.
Yeah, I mean, great point. And that right there, that chart, gold has been the killer for a lot of traders right now, because you guys, we've talked about this 17,000 times on this live stream together. When a chart looks like that, you guys know as well as I do what people are out there doing. They're shorting this thing every time it hits a new high. And you know, they're blowing accounts. I mean, it is something that we see over and over and over in the trading space, is people just fight trends. And you know, I had a commenter once say, it has stuck with me since. It's like the first thing you learn as a trader, like anywhere, any textbook, any read, is like follow the trend. And somehow traders typically do not do that. They don't follow trends. They fight them. So I'm curious also, Miko, what are your thoughts on metals? Gold, silver. I like silver. I have a long position, so I'm a little bit biased here, but gold also looks really strong. What are your thoughts on these?
Yeah, they still look very, very bullish to me. And I really like silver because silver's still got that kind of motivation to keep, I mean, so does gold, but I like it because gold's at all-time high. So it's kind of doing its job very well. Well, silver is lagging behind. So I kind of like that opportunity there for silver. At the moment, there's a bit of resistance here. So that might be causing a bit of friction there for silver, but I do have some nice areas of confidence just below where we're trading. So I'm looking to see if I can get a slightly deeper pullback for silver for some entries around 31.1. And that's what I'm looking to see if I can find a trade, or if we're just very bullish and we break the high, then I'll look to see if I can find the next pullback afterwards, just because we've got a bit of noise there, which price is rejecting, and it did pretty well on Friday as well. But in terms of the direction, still very bullish. Gold's very bullish as well. I think gold's really nice to trade in like more like an hourly chart, maybe 30-minute chart, just trying to find those dips. On the full hour, it's not really providing that. I mean, depends how you're going to look to trade it, but the risk reward back to the high is going to be a little bit tricky. But if you can find some entries on the hourly chart, there's been multiple dips here, and gold's still looking like it's probably going to push back to the highs there. So eventually we're probably going to see a bigger pullback for gold. It's not going to keep going forever, but in terms of the general trend, it's still very much up, so I'd only be looking for buys.
Yeah, I did something on my channel a while ago, and just because gold is so interesting, I just want to maybe show this to everybody. So if we go back, what am I looking for? I'm looking back over here. Actually, you know what? I'm going to do a chart that is crazy. We're going to look at the 12-month chart. So this is yearly bars for gold. And the reason I bring this up is that it is not a new thing. There are going to be people every single day on our live streams, on our YouTube videos, on you guys' channel, on my channel, who say, this is ridiculous. Gold has got to pull back. And you might say, this looks absolutely insane. It's going to crash. But let me show you what it looked like back here. This is crazy. Look at this. Look, it looks the same. And what happened? Boom, boom, boom. Years of just massive gains. So I'm not saying that gold can't have a pullback and maybe shoot lower, but this is the ultimate don't fight the trend concept. Here's a yearly chart of gold. And when it has these big up moves, what's interesting here is if I was to take the dumbest mindset ever, what is your confirmation that gold is actually going to be bearish? When you have a bearish year. Look at this. When you have a full bearish year, you get another bearish year. When you get a full bearish year, you have another bearish year. But if you get a bullish year, it is incredibly likely on this chart that you get another one to follow. So the second we sort of just humble ourselves and say, look, we don't know where the top of gold is. Gold could go to 3,500 an ounce this year. Probably for the better for us. Again, I'm not saying go out there and just full port leverage your longs and get into gold. I'm just saying the second we humble ourselves and say we don't know how far this thing can run, and they print $1 bajillion a day out there, it makes sense that gold continues to drift higher. Now, silver, I wish it got the same kind of love. And maybe, to your point, Miko, maybe it's going to start. Maybe we're going to see silver have that fabled catch-up trade that, you and I have been talking about it for a few years, but there's been people who have been talking about it for decades. People who in the crypto or in the metals space believe that silver is severely undervalued on a long-term basis and that maybe it has this ginormous catch-up. We'll see. Again, that's just as foolish, in my opinion, to make massive predictions like that as it is to try and call a top. But the trend is where I kind of draw the line. It's like the trend is up. Let's just trade in the direction of the trend and not try and get smart and not, be too arrogant about it. But anyways, that's my thoughts on metals. Really important topic there today.
Sorry.
Yeah, go ahead.
So what's your fundamental play on silver? I get the technical one, but what's your fundamental? Is it edge finder? And
yes.
Okay, cool.
So it's getting a bullish reading, but that doesn't mean a whole lot unless you kind of understand the core. So I'll just keep it really simple because I don't want to take up too much time. I know we got to keep going through charts. Really simple. A lot of our economic growth figures like PMIs are missing expectations. Growth. Now, there's still good growth in the U.S. economy. Now, of course, the U.S. economy is like the bulk of the world's, it's centric to the whole world. So we could look also at UK and look at Europe, and that it would be worthwhile doing. In fact, if we did that, these are also showing a lot of red. But my point here is that we're seeing cooling in the growth departments compared to forecasts. That makes stocks look a little less attractive, crypto a little less attractive if you're getting less growth, because then people start looking for alternatives and safe havens like gold and silver. So I think it offers an alternative to traditional stocks, which, we've been talking about this together, keeping it technical focused for a second. We've talked about how, for a while we've had stocks just hitting every single, week, it seems like, new all-time highs. And I'm not a bear on that, but at some point we know, like, okay, maybe to Miko's point about silver, maybe there's a catch-up trade here. Maybe metals as a whole have a catch-up couple of years. These trends can take place over years. We're talking about, like, when we talk about daily charts and 4-hour charts, we could be talking about years of metals having a run and taking a turn over indices. So right now, I don't predict that kind of stuff. I just look at what we're looking at. We're getting cooling economic data, inflation that's not going away. I like metals in that environment. So understanding the environment is really, really important for me as a fundamentalist. But from even a technical traders like you guys who focus very heavily on that, we can kind of see some of that. Metals are breaking out. Meanwhile, look at NASDAQ. There's not the same, kind of clear-cut moves in this. Speaking of these, are you guys seeing the same? We'll go same question to you guys. Marco, real quick, what are your thoughts on indices? Are these choppy, or is there any of them that are moving nice?
Yeah, indices are not that interesting currently. Gold is much more interesting. S&P 500 just seems to be very flat in terms of technicals on this daily chart, very corrective. NASDAQ is probably going to be doing the same thing, so just being very flat. Does that mean I'm bearish? No, I'm still very bullish because we have this key, I would say, trend line going through right here. And that is exactly how the indices like to move. They like to move in these channel formations. So as long as this lower trend line gets respected, even this can happen. I mean, we can pierce through it and then close above. A big, let's say, warning sign would be a fat red candle on the daily, and then a second one following it down like this. That would be a big bearish sign in my personal opinion. But if we just pierce it by one candle and then retrace, that's no biggie. So still very bullish, but we're pausing here a little bit. And personally, I'm not concerned. Just by the technicals, fundamentals may be a different story, but the technicals have still not broken the key level with a lot of bearish momentum. So I have to be bullish.
Okay. Yeah, fair enough. Miko, what about yourself? Are you looking at any indices, or if you are to look at them, how do you feel about them?
Yeah, still pretty much the same outlook as Marco. Everything is very, very bullish. Although we are getting some very choppy price action right now. US 30 consolidating there. If I go take a look at the NAS, we are consolidating here as well. And of course, S&P, we are not really going anywhere as well. But of course, if we expand and look at the higher time frames, there's of course one direction. So still bullish, expecting price to continue. In terms of actually finding opportunities, I would wait for some breakouts, really, especially if you're looking for momentum and you want to try and follow momentum, because there just isn't really much right now, at least intraday anyway. I would wait to see if price can start breaking through some highs. This is SP 500. If you can start taking out some of these highs and looking for some pullbacks afterwards, there could be some really nice long opportunities on the 4-hour chart, or even intraday, or at least lower time frames anyway. So still bullish overall. Not really seeing any opportunities to trade them now, unless maybe they come back down to the lower end of the range and you find some longs at the lower end, which would make sense. You can get some nice stops and some decent risk reward plays. But I think the better move, or at least a nice move if you're looking for a short-term move, is waiting for a breakout and looking to follow that.
Yeah, no, I agree with you guys both. I mean, just a choppy range here for now. Last one on the list here for us, guys, is Bitcoin or Ethereum, anything crypto related. Marco, what are your thoughts? Are you I know you mostly hold Bitcoin, but from a price action standpoint, how do these ones look to you?
Well, Bitcoin is just flat right here, very flat, doing nothing. Kind of following the S&P 500 or NASDAQ. So I would just look at the levels. I would look at this level and the one above. I was pretty, let's say, excited. You shouldn't be excited in trading, but I was excited right here, and I thought we're going to follow through. At this point, we didn't. We retraced, but that's okay. So right now I have the levels, and a big bearish indicator would be, again, on the daily chart, if two fat red candles print, then I'm going to be really bearish. And if the same thing happens to the opposite side, so two big blue candles, I'll be very bullish. Until that happens, I'm just neutral and flat. That's for Bitcoin, but Ethereum is very, very bad. So Ethereum really doesn't look good. We are now back at the levels where we have been, let's say, well, we just are not moving as I would like to see it on Ethereum. So we're just kind of overall even in this sort of a flat range, and we were approaching the all-time highs, or this high, major high, didn't break it. And then we heavily retraced with a lot of bearish momentum. We got 2 big red candles here as well. So I'm actually pretty bearish on Ethereum. I don't know what is happening behind the scenes, like the fundamentals and stuff. But Bitcoin, I would say, is currently a much better, much more stable hold if you want to have some crypto in your portfolio on the side. So Ethereum is very bad. Bitcoin holding up pretty well, actually. So I'm pretty, you could say, proud of Bitcoin in this environment.
Yeah, and I want to go to Miko yourself as well, but I want to show you just both in a chart that I drew up while Marco was talking about this. So if you have bought Bitcoin in May of 2021 and held it to now, we talk about this. Some of us are more crypto hodlers. Some of us are traders. Some of us, are just super long-term investors, whatever. You have seen about 100% return on your money, which is great. That's a great return. And that's buying it in the frenzy buying that was going on in 2021. You still are up. You doubled your money. So can't complain there. But you also have to remember that to get that 100% return, you took tremendous risk. When you buy Bitcoin, you're taking tremendous risk because it could go to zero. And so, you risked 100% to make 100%, let's call it. Or maybe you hold it and it goes up to 200%. The point is, when we compare this same concept, May of 2021 on Ethereum, you are flat on your investment. You have not returned a dime. And not only have you not returned a dime, you haven't collected dividends. If you hold SP500, you usually collect dividends. If you hold bonds, you get paid coupons. If you trade Forex in the direction of positive swap, you get paid. Ethereum, you took tremendous risk and have gone break even during this time. I'm not picking on anybody who owns Ethereum because I think I own some. I don't own a lot, but my point is, the relative performance here is very interesting. Miko, when it comes to Bitcoin, I know we all kind of think it looks choppy, but speak on what we just talked about there a little bit. Like if you were to look at cryptos from a bullish perspective, maybe a long-term buying the dip opportunity, does that concept play into your thinking? I mean, for me, I would say, okay, so that tells me I don't want to be buying Ethereum's dip as much as I want to wait for Bitcoin dips, which clearly has had long-term some relative strength performance. Or do you look at it the opposite? Do you say, well, the catch up for Ethereum could be more violent. Some of the altcoins could be more violent. I'd rather buy those dips. And what do you think?
Yeah, I think there's a bit of both. Depends on the person, because I think both sides of the argument make a lot of sense, because Ethereum hasn't gone anywhere. So you're definitely scratching your head right now. Whereas Bitcoin, you're still relatively very, very happy. So in that case, you're holding the short straw, but we don't necessarily know in 2 years' time, because for Bitcoin now, we have to get to 200K for price to double, which price may still do quicker than Ethereum getting to, I don't know, what's the all-time high, 5K, so 10K, something like that. So 3K, 6K, somewhere around there. But in terms of the percentage growth and also the distance in the monetary, Bitcoin has to do so much more to get to double than Ethereum. So it makes sense to hold Ethereum because of that potential, but of course it hasn't really worked out yet. So my thinking is if you're looking to hold, you've got to be all in for it. So if Ethereum hasn't paid off by now, you're kind of still looking just to hold and see where it continue, because otherwise there's no point in investing in the first place. You shouldn't really be investing with something you can afford to lose in the first place as well. But my thinking with Bitcoin as well is that I'm expecting higher prices, whether we break to the upside of the consolidation or we come down first to go higher. I'm still very much bullish overall, at least looking at the trend here for Bitcoin. So, and Ethereum is very flat as well. So kind of with market there, it doesn't look as great. But when I kind of look at the weekly chart, I kind of look at it in terms of, as long as price kind of keeps up this slight uptrend, I think there's still hope for this one to eventually push up as well. So I'm still pretty bullish on Ethereum, but yeah, it just hasn't been that great for the past year.
Yeah, and I think the frustrating part about a lot of the crypto space is it's like, okay, you've had this run up in Bitcoin, and yet I look at Dogecoin as my proxy for the altcoin space, just because it's, you know, a notable altcoin of history. Maybe I should change it to something else. I don't know. Maybe fart coin is more fitting, but
Trump coin.
yes, Trump coin, so, something like that. But just as a comparison, you know, you don't see those things reaching their all-time highs. And maybe one last thought on this is that there's times where, you know, if you buy the underperformer, it can actually substantially increase your gains if you're right about a turnaround story. Like if you buy, you know, XRP, or you buy Doge, or you buy, you know, Ethereum, there may be a true crypto, maybe it's crypto summer, you know, when it warms up again, maybe crypto summer, I don't know. But when that happens, those things have massive relative outperformance to Bitcoin. But there are like times maybe where you shift between the two. Another really disappointing and frustrating one that we just talked about that's decades old is gold and silver. Here's gold, all-time nominal high. Silver so far away from its all-time high. So maybe in the long term, there is a reward out there for people who do have the patience to play the catch-up trade. But it hurts in the meantime when you see gold ripping every single day, and all these people who invested in silver instead, or in the crypto space, everybody who bought Ethereum, who's watching crypto have a party on a yacht, and they're sitting there, you know, back to 2021 levels. So it's I mean, this is why trading and investing is just hard. And that's another thing. A lot of people love to say like, oh, just buy and hold, it's way easier, and invest. And it's like, yes and no, because imagine if for the last multiple years, all your money was, and you shouldn't do this, but all your money was sitting in Ethereum, and you made 0% returns, no commission, or no dividends, no nothing, right? Your money just sat there and lost to inflation, putting all your money in super high risk stuff. So, you know, you have to, it's all relative. That's one of the pros to trading, is taking a more active approach. You know, in theory, you can potentially yield something.
Oh, and if I could just add, so you could really see a shift during the bull run. People started moving away from Forex and into crypto. Mm-hmm. So people are constantly switching between what is hot and what is not. So it's either Forex, crypto, now it's gold, it's going to be stocks next, or something else. So for anyone that's learning out there, just stick to one thing, because you really need to get deep into one thing to learn about it.
That's actually a great point too, Mark. I mean, right now, I would say a lot of the hype is around a lot of retail stocks like Palantir. I'm sure you guys have heard Palantir. This is the new AI company, and Tesla's been an age-old, you know, popular company. Reddit hit the markets here this year. A very popular MSTR, which takes Bitcoin. If you guys have heard, the Michael Saylor guy who runs this company is taking pretty much all the proceeds from people who are buying the stock and dumping it into Bitcoin. So you have, you know, if you want to play Bitcoin, that's old school way of doing it. You want to just buy and hold Bitcoin. Why would you do that when you could buy MSTR, which is a super leveraged play on Bitcoin? So it's the problem is the markets, like you said, they chase shiny objects. They switch from, oh, I'm all in on Palantir. And then when Palantir moves lower, they take a loss and they go and they buy Ethereum. And so it's just, yeah, caution is something I think all three of us have learned over the years. Just you get burnt a couple of times, and you're like, okay, I'm not an idiot. I'm not going to do the same thing every time. And then there's a new cycle of youngsters who are into trading, and it's how the game is played. You hopefully, you know, everyone who's watching this stream learns something from Miko, Marco, and myself. You got to be cautious. You gotta take it one step at a time. But guys, thank you very much for coming on. That's it from our side. We went through a lot of charts, talked a lot of stuff here today. I want to just ask everybody who's watching, take 2 seconds. Make sure, if you have not already, go subscribe to both Miko and Marco on social media. If you're watching on Twitter or YouTube, you can search up their name, Miko Audu or Marco's Trading Journey, on Twitter, on YouTube, on socials. We also have the link here dropped in the chat. You can subscribe to Marco, and you've also got Miko, where's Miko? Miko's somewhere on this list. Yeah, there it is. Maybe we'll drop Miko's one more time. But guys, please do us a big favor. These contributions between Miko and Marco coming on to the show each week, this is what makes the show as quality as it is. So thank you guys very much for coming on, and we'll see you back next week.
Thank you. See you next week. Goodbye.
See ya.
See you guys. Yep, always good to have them on. And again, the biggest thing you could do to support the show here is to go support our guests, because they come on off of their own free will, love of the sport, if you will. They share their thoughts, they share their ideas, and it brings a lot of value to the community here. So we want to make sure that we are rewarding them the best way we can, which is simply just sending them a following of their own, right? If you like what they had to say, please take a second to go support their work. You know, it's not easy out here being a content creator. You know, there's a lot of there's a lot of stress, if you will. So support your local influencer. I know I joke, because you know what, there are way harder things out there to be doing in your life, and we are privileged and thankful to be able to do this every day. So if you've gotten to the point of becoming a profitable trader, I would never insult you to say, you're lucky to be in that situation, because I know firsthand the blood, sweat, and tears that goes into becoming a profitable trader. But once you're there, you do have to kind of be grateful for your own hard work and for your position. So if that's you, if you're trading for a living, or you are at a point where trading makes up a good extra component of your income, you're standing on a hill that you climbed painfully to get, but you got to accept, the view's pretty good, right? Anyways, let's take a look at the VIX. The VIX has been all over the place. Pops higher, drops, not really any recent pops. CPI was the closest thing to a big market mover this week, but we saw how fast this CPI drop actually got filled. You can see how big that is. I mean, that's a huge drop, and just very quickly recaptured that area. Again, this is, while I would say I'm mixed on indices myself, we do have to admit they're pretty impressively holding steady despite tariffs and inflation and all that. There is some pretty impressive stuff. Let me take a look. What are we looking at in terms of live stream schedule? Do we have Chris coming on at 10:15? Okay, we do. That is an hour away. I've been going since 8:15. So let me think. Do we have anybody else coming on? Chandler James? Nobody else coming? Okay. I got to think. Do we call the stream early? I don't know if I have another hour in me. I got to do a bunch of stuff today. So we'll see. We will see. VIX down 1.2% today. I actually would love a pop in the VIX. I would love to be able to sell some puts, but I'd prefer to do so when the VIX is up. I'm sitting pretty cash heavy in my account. Would love to get some bigger opportunities, especially if it was, here would be the perfect scenario. VIX pop off of uncertainty. The TLT trade came back a good bit here. So I'm just going to stay in that. Like I said, I'm pretty cash heavy. Would like to see a fall in indices if it happens, but if it doesn't, I'm certainly not holding my breath. Silver here, we're in profit on this position. I would like to, if this thing can push back to the highs, I'd like to trim that risk a little bit. But if we completely fall, it'll be a small loss on silver. So we'll see. No Chris Pulver today. He is scheduled. The issue is we have a big gap here on the show. I've been going for an hour or so, and I got a bunch of stuff I got to work on today. Do I want to watch Trump's speech live? That's what James just sent me. our producer James? I don't know. What is he speaking about? Does anybody what's the let me look it up. Is he speaking live? What is he I don't see it on here. Reciprocal tariffs? (1 p.m. Eastern. Okay. Yeah, so I mean, that's the other thing. Part of the reason I like metals, which, you know, could work out, maybe it won't. But one reason I do like them, gold and silver, is the alternative aspect to traditional indices, right? So if you get a big spike in the VIX and markets freak out a little bit, that could actually be excellent for metals. Depends what the spike is. There's different types of VIX spikes. You could get a big VIX pop off of inflation going crazy. That would cause, you know, gold, silver likely to drop. Same thing with indices. Or you could get a spike on uncertainties about geopolitical events in which gold and silver would likely rip. So you can get two different types of spikes. Yesterday's meme competition again. That was fun, but it takes us a little time to set that up. So we're probably not gonna do another giveaway. We gave away a copy of the Edge Finder yesterday in our Telegram channel to the best meme submitted. I do want to encourage you, if you want to take advantage of future giveaways, free courses, daily analysis, macro setups, make sure to join our Telegram channel. We've actually been really growing the Telegram quite a bit. This is we've really focused up on our Telegram this year. Telegram is it's a really great app for traders. It's really simple. You can get notified whenever we share an idea or commentary. And even if you miss a stream or two, you can still stay up to date with the analysis being posted in there. So come join us. If you have not already, the Telegram channel is completely free to join. We got a solid uptrend. And with that solid uptrend, we're going to be giving away a ton of stuff. We're going to be sharing free resources to traders. This is probably this. Okay, I got two places for you. If you're a regular stream viewer, if you want some free game to help you in your trading, step one, join the Telegram. Step two, go over to a1trading.com and bookmark this page. Because on this page, you have free courses, you have broker sign-up perks available to you, you have free indicators that you can use, you can find out more information about our products that we build and sell, you can get latest updates and discounts on our products, and like I said, you can check out our free resources. Head over to a1trading.com. We're constantly adding new things to improve this site, and make sure that's bookmarked. Again, why not? It is free stuff. Who doesn't love free stuff? So, yeah, we'll see what happens here. Silver giving back a little bit of those gains from yesterday. Like I said, scenario one is we push higher, in which case I'll look to trim and potentially trail into profit my stop loss. And scenario two is if we completely flop and metals can't hold up this momentum we've recently seen, then I will stop out. And the thing is, stopping out is only scary if you're over leveraged or, you know, not managing risk appropriately. Telegram channels at all-time high. It is. We've got a lot of new people joining us, so that's been exciting. Chinese stocks down here about 1.6% today. Very interesting. Oil's down again today. Look at this, back down to 71. Bitcoin down 2%. TLT up 1%. My goodness. US stock market opens up in just a few minutes. I'll probably just watch the market open reaction, and then I think I'm probably gonna call it quits on the stream. We may, if Chris wants to, we could start the stream back up for his segment. Just do a second segment. That might be fine. But again, we got 2 minutes to market open here. So let's see what happens there. Are you trading silver ETF or futures? I'm trading silver's ETF SLV. Nick, German 40 is not affected by politics from the US because European products are sold in the US. So I'm asking why Germany is hitting record highs. The DAX absolutely trades off of US stuff, like really heavily actually, because who's the biggest partner for a lot of European trade? It's like China and the US. So if the US imposes heavy tariffs, specifically the automotive world in Germany, which exports a lot of cars, right? If they impose tariffs and they make that trade more disrupted, then that could be really hurtful to the DAX. However, I think a lot of the fears around tariffs are seen as a little overblown, and I think that's part of the reason why the DAX is ripping here. That and the ECB is looking to cut rates. So you've got, the ECB cutting rates. You've got people less freaking out about tariffs that they were. The tariff stuff is not like, oh, we just woke up one day and started thinking about it. They started thinking about this months ago when when it looked like Trump was going to win the election and the odds and were stuff favoring the stock market, the markets in general were voting that Trump was going to win the election far before he won the election. That's how smart the market is. They saw it coming. And so markets started trading in that direction beforehand. And then before he even became a president, right? We've seen this follow through to the upside once he became president. The inauguration started. Look at this. So right around January 20th, you can see this thing starts taking off running because tariff fears were very high and they've kind of dwindled. It doesn't mean they're completely gone. We could see EU tariffs go heavy and then that could probably kick back the DAX. But right now it is ripping higher because perhaps the US tariffs are not as big as imposed. Another thing we can look at, and again, this is why markets are difficult. You can watch so many things. You can spend countless hours and still miss stuff. But if we take a look at some of these stocks for US car manufacturers like Ford, GM, what is Stellantis? Stellantis. Am I spelling that wrong? Oh, wait, I had it. Okay, no, I'm spelling it wrong. Is that even publicly traded? Oh, there it is, STLA. Here's Stellantis up 3%. This makes Jeep. So you have all these companies make cars. There's some tariff exceptions that they're discussing. If tariff exceptions somehow extend to Germany's exports of, BMW, Volkswagen, all that, that's huge. It's a big part of what Germany produces is cars. Okay, U.S. stock market just opened up. Let's take a look at the opening reaction. We've got S&P 500 slightly higher here, trading at 60.71. NASDAQ also ripping here off of the bat. Inflation data hot, and yet stocks holding up real strong. That's really impressive. Notably, the Russell is down off of the open. Dow Jones, NASDAQ poked higher. Let's see if it follows through. S&P 500. But yes, one thing you do definitely need to think about, markets are incredibly connected. So what the US does absolutely affects Japan, Germany, Australia, certainly impacts. I mean, the Australian dollar, for example, trades heavy off of what's happening in China because, of course, they're huge trade partners. The world is very globalized. So you do have to consider pretty much everything. That's why, again, markets are difficult, is there's a lot to know and a lot to learn. Anyways, that's going to be it for me, guys. I'm going to wrap it up there. I've been on stream for a while, so I'm going to get on with my day, do some other stuff. We may be back with Chris Pulver if that's something he wants to do. I'll let the producers sort that out if they'd like to. And with that said, thank you guys for watching. Before I head out, remember, if you guys want to try out the Edge Finder for 30 days, we'll drop the link to apply to that. You can fill out this application form, and we'll send you some information about getting a 30-day trial to the Edge Finder if that's something that you're interested in doing. You can try out our market heat map, COT data, top setups algorithm, economic data reports, and so much more. So take advantage of that. The link is in the chat right now. Okay, stay tuned, guys. We may be back with Chris Pulver. If you'd like to catch that show, we may kick it back up. Just depends on what Chris and the producers want to do. Thanks, guys, for watching. We'll see you tomorrow.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.